So many things are happening. There's a war between Russia and Ukraine, and probably by the time I'm doing this video, they'll be taking over the capital city, and that's going to cause a lot of ripple effect within Europe. And then we've had the interest rates being hiked. That has happened recently with the Fed, within the UK, in the US, everywhere else. Interest rates are being hiked. We're looking at the slowing growth, the slowing economic growth. Even before this issue with Russia and Ukraine, there was fear of slowing economic growth. Then, of course, there was the Omicron that affected a lot of stuff. Then we have the supply chains that were disrupted. If you're in the UK, you know what happened. So many things are happening that could actually affect you. I haven't even mentioned inflation yet. So all these factors are affecting you as an investor, and you have to dodge them. How do you dodge them? And how do you basically invest in a volatile market? How do you ensure that despite how things are, you're still making the money? So you have to protect your money. Remember, the rules by Warren Buffett says very clearly that rule number 1 is never lose money, and rule number 2 is do not forget rule number 1. That means don't lose money. And of course, that's not as easy as it sounds, especially if you are investing in the stock market, especially if you're aggressive and therefore you're going for, higher returns, higher risks, and of course, higher chances of you losing your money. But of course, you still have to do certain things to make sure that you're on the right path. There are certain things that you could do to make sure that you could protect yourself in a good way and still make returns out of it. People have built wealth in the stock market. People have built wealth investing in businesses. People have built wealth during wars. And if you look at the S&P 500, even during wars, it's always just gone down, reacted to the news, and still gone back up. If you look at the companies, they are resilient enough because people still need to live. So how do you invest in a volatile market successfully and still make money? How do you invest in an environment whereby there is Russia here invading Ukraine, and a lot of sanctions being meted out to Russia from all corners of the world, in the Europe and in the US, a lot of issues within NATO not being able to support enough their allies. There's so many international issues, international politics, And if you're in Kenya, you're also looking at the upcoming elections. There are so many things happening. How do you invest? So this will be a guide to almost everyone who is interested in making some money and building wealth using the stock market. Even if it's not the stock market, these things still affect you. So you need to find ways in which you can protect yourself. Number 1, in a volatile market like it is right now, when things are all red, going crazy, your portfolio being hit like 20% down, and you're like, oh my God, that is so bad. You had 100,000, all of a sudden you have 50,000. All of a sudden you have like 500,000 or even less, So this is not something that's easy. And sometimes people say, oh, you need to ride it out, but sometimes it might not be easy. But I'm going to give you some few tips on how you can do this. Number 1, thinking long term. I always tell people that the best way you can start building wealth is by thinking long term. Remember, these things happen all the time, but the market has always been resilient enough to come back up. If you look at the S&P 500 chart, you can see a very clear spike going up. So despite all these small fluctuations, despite all the volatilities in any market, at some point, if you look at historical data, it's going to go back up. And if it goes down completely, then that's the least of our worries, because it means the markets will be completely gone and the dollar will have become completely useless, and therefore we have a different worry to have. Right now, all you need to know is that things have happened. There was the World War I and II, and there was the Cold War. All these things have happened, and the markets have always been resilient enough. There was just COVID the other day, new variants coming up all the time. So think long term. If you're investing in the market, always invest money that you do not need immediately. Don't invest money that you need for your rent, money that you need to pay something soon enough. Look at it in terms of 5 years and above. 5 years, 10 years best, even longer. Of course, the more time you give it in the market, the more money you're getting. So start thinking long term. That's one strategy that you could employ today to help you navigate the volatile market. Remember, unless you cash it out, unless you sell your stocks or you sell whatever investment you have, then you haven't locked in that particular loss. It's just a paper loss, not real money loss. And we know that if you let it stay on the course, it's gonna get back up. So the second thing that I tell people is remember your objectives or your reason for investing. It is very important for you to always remind yourself why you are invested in the first place and why you chose those particular stocks, those particular indices, or those particular ETFs, or that particular business that you bought into. Remember your objectives, remember why you are investing, remember your reason for investing, and know your stocks. That's why you should never just invest in anything for the sake of it. You should invest in something because you understand it, you know it, you expect certain things to happen. And if you still believe in those goals, those values, those principles, those factors or those fundamentals of that company, then there's no need panicking when certain things happen in the meantime. Because you know what? If there was a very good reason why you invested in those companies, in those stocks, in those businesses, then chances are it will still do well. So that gives you faith and confidence in whatever it is you're investing in. So know your reason for investing, know the things you're investing in, and that will help you read it out properly and think long term, because you will be like, you know what? I know why I invested in this company. So that's very important. And a lot of people do forget why they invested in certain products at certain points. If you forget, then that becomes a problem. Then you start now wobbling and worrying, okay, why do I even have this? But if you have clear objectives, if you have clear goals, if you had clear reasons for investing in a particular product or stock, then you know what to do. Stay the course. Then one old adage is diversify. Diversification will help you. So for example, right now stocks are going crazy. If you are investing in bonds have done well during this period that things have been so volatile. Those who went into gold have seen good growth. Those who went into oil have also seen good growth. So you have to be in a position to know exactly what you have been investing in and diversify accordingly. So if you have stocks, you want to make sure you have some bonds in there. People who are in Africa, for example, our money market funds are amazing. Our treasury bills are okay. Our bonds are perfect. You could have certain things in bonds. And then the stocks will take less of a hit when things are going wrong. So if you have your portfolio well diversified, then you're in a position to ride it out and know that, you know what, however much I've lost some money in the stock market momentarily, then I have something to, to cushion me for the time being, for example, bonds and money market funds and stuff like that. So you always have something to cushion you against certain drops that could happen in the market, because the market is so undetermined. It's something that you can really not be sure about. So that's something you want to make sure you have diversification. Then this is not the time to sit on cash. Dollar cost averaging. If you are investing, invest a certain amount every single time. If you are investing monthly, continue doing so. If you are investing every 2 weeks, continue doing so. It is the best time to start investing, not start really, but to continue investing the way you are investing. If you are doing the dollar cost averaging, do it. Sometimes a correction or a drop in the market is a perfect time for you to actually buy more shares. So for example, recently I was buying the same number of shares I was buying of a particular stock, and instead of paying so much for it, like I always pay over 1,000, I was paying way less than 1,000, and that helps me in getting more shares with the same amount of money that I've always invested. So dollar cost averaging, if you are investing at a particular period or instance, continue investing as you go along. Continue investing the same way. Stay that course. Do it the way you've been doing it, and don't sit on cash. This is not the time to sit on hard cash, because you know what? Inflation gets worse, economy gets worse, and that money loses value much faster than in any other condition. So this is not the time to take cash and sit on it. It's a wrong idea. People say, oh, you should have some cash now. Yes, you should have an emergency fund, which I'll mention, but the money that is meant to be invested, let it go into investment. Continue with that strategy. Continue investing, and don't sit on cash. Do what we call dollar cost averaging. If you have any lump sum, this is the perfect time to buy stocks on discount. It's like the market is on discount. Buy, and buy. This is the perfect time, because the market will get back up. So the next way you can actually deal with volatility is to make certain changes to your portfolio if there's need. Sometimes probably you could find during COVID that the health sector was doing really well because of what is happening. Everything else was doing bad. The consumer and the health sector was doing well. So in that time, probably you want to buy more of the health stocks, or buy more of the consumer stocks depending on what is happening, or buy more of energy stocks depending on what's happening. So you might make some small changes if necessary, but not big changes that changes the whole outlook or the whole strategy that you've been having towards your investing. So it is okay to make certain changes. It's okay to make a few small changes. Don't be too rigid and say, hey, despite what's happening, you just stick on it and whatever it is. Sometimes you can make small changes. You can fix it a little bit, but only if you feel the need to, and you've done enough research to do that. You've done enough research to know what you exactly are you doing and why are you doing it. Remember, you must still know why you invested in those particular stocks, and if this is an opportunity that supports your strategy, if this is an opportunity that supports your overall strategy, you can as well make some changes to whatever it is that you invested in. But don't change your investment strategy just because things are happening. That is not the best way to do it. Then you want to avoid day trading right now. If you are not a day trader, I know day traders who trade every single day, so they would know how to trade right now. But don't start right now. Don't come into the markets and see things are moving very fast and see big drops and big spikes, and then you want to get in and start day trading. You're going to lose money. So if you're not a day trader, usually this is the time to avoid day trading. Continue with your strategy. If you are an investor, continue investing. If you are a trader, continue with the trading as usual. But of course, now you know what to do by using fundamentals and stuff like that. But don't come into the markets. You've never been there. You've never been a day trader. Then you want to day trade just because you're seeing lots of big movements. You're going to lose money big time because you have no reason, you have no foundation, you have no knowledge of what you're doing. So avoid day trading at such volatile times in the market. I know sometimes it looks tempting when you see the market drops or it spikes. You see money, that's money, but you're like, okay, do you have the information? Do you have the knowledge to actually do it? Don't lose money at such times, because this is also the fastest time you can lose money. It could happen so quick that you can't even know what hit you. So avoid day trading at such a time. And then you also want to have some emergency fund. Always when you're investing, you have an emergency fund where you can dip in so that you don't have to interfere with your investments at the wrong time. One thing that takes you back when it comes to investing is because you could dip into your investments at the wrong time. So dipping into your investment at this particular time would be locking in those losses. So I told you that these are just paper losses until you lock them in by selling. So if you have an emergency that forces you to sell at this particular time, you're definitely going to lose money if you're in the stock market. You're going to lose quite a substantial amount of money. So if you have some cash, some emergency fund somewhere, then you are okay to ride it out and be very patient with the market. Let it run its full course and get back to its normal position. This is not the time to start selling. This is not the time to dip in there because you have an emergency. And that's why we always say, before you start investing, have an emergency fund, have money, have an insurance. An emergency fund is like an insurance against your investments, so that you don't have to interfere with them or dip into them at the wrong time. It can be costly, and you don't want to do that. And then finally, on this particular learning path, I would say find ways of educating yourself. Know what you're doing, get more information. Know how things that are happening are going to affect you. So for example, the Ukraine-Russian issue, know how this is going to affect you. How is it going to affect inflation, economic growth, your purchasing power as a person, your country? How does it affect everything else around you? Remember, for example, right now, oil has been affected. And oil is basically energy. And energy is almost all the goods and services that we use. Be it flying, be it cooking oil, be it gas, be it whatever, all these things that we have comes from this energy and natural gas that has now been affected. So educate yourself, know what is happening, be aware, and make sure you stay on top of things. Stay on top of news, know what is happening. Before you make any moves, be informed. So educating yourself is one of the most important things. It should actually be number one, because you'd always know what you're doing before you do anything. Otherwise, I hope that helps you in managing your investment during this time. Remember, at Ken's Money Matters, I teach all these things. If you are interested, welcome to Ken's Money Matters Financial Literacy School, whereby I do one-on-one coaching for anyone, any situation, any circumstances. We don't judge. All we do is help you get out of your situation. Comment, let me know your thoughts during this time. What are you doing in your portfolio? What are you doing differently? Are you just starting out with investment? Have you been investing? Are you making any changes? Let me know. Until next time, keep